Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, June 6th at about 2:30 p.m. Eastern. Well, U.S. job growth slowed in May while the unemployment rate held steady, potentially giving the Federal Reserve a buffer to, again, delay the resumption of interest rate cuts. Non-farm payrolls increased by 139,000 jobs last month, after rising by a downwardly revised 147,000 in April. The Labor Department said this morning economists polled by Reuters had forecast 130,000 jobs added last month after a previously reported 177,000 advance in April. And on that, believe it or not, cheerful note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, you can see over here the SPY was trading at $598.81. Actually, it trades a little slightly different than the S&P 500 itself, which was actually back over 6,000 today when I captured this chart. So, but the SPY, the ETF that represents it, was trading at $598.81. But anyway, we're doing good. And this is just barely below its all-time closing high, as you can see back here in February 19th at 612. See that little candle there? $612.93. That was the all-time closing high. So back over here to the right side of the chart, as we can see, the SPY is now sitting above, or I should say still sitting above, its 20-day moving average, the red line, coming in at, I'm going to round these off, coming in at about $588, $599. That's the 20-day moving average. You can see right here. And the 200-day is just below it. The black line's coming in at $578. And just down below that, still inverted to the 200, the green line, the 50-day moving average, is coming in at $561 and change. So if we look down here to this a low, I think we all remember the April 7th low, and that low on that day was $481.80. When the SPY made the low that day, the next day we had a jump up and fall down, then the next day we had April 9th, which flew back up. And from there, the SPY moved up dramatically, back up above the 200-day moving average, back up above these 595 highs in May. Again, back up to where we are now at $598 and change. That's about a 24, from lows to high, back to where we are, that's about a 24% gain. That's pretty sweet. That was a pretty fast recovery there. Back up to where we are now, really close, about a 24% gain, back up to where we are now, closing in on these highs back, as I said before, at about $613 back here in February. So we know that since that high in February, that the SPY rolled over and fell down to right here to the March 13th low at 550, then rallied to the 200-day moving average. And that's why we keep an eye on these moving averages, because they can act as support or resistance that sometimes is really tough, depending where the price is trading below. Here it was trading below the 200-day moving average, came up to it, and just had one little tiny day on top of that 200-day, then rolled over again really hard, tried to hold this 560 zone, could not do it, and price fell all the way down to, as I said before, down to the April 7th low at $481.80. Then it bounced here on April 9th. It came up, hit its head on the 20-day moving average, then fell back down here to, pulled back to 508 is what I'm trying to say right here. So it moved up, hit its head on the 20-day, fell back down here to 508, then rallied up again to, as I said back here, back up to 595 in May. to where we are now. So we have a pretty, and we talked about this last week, we have a pretty dramatic cup with a handle here. Usually they're not quite this theatrical, but this one certainly is. And getting a low above the 50-day again was a good thing, but looking at this, I thought if it can get above the 200-day, then that's pretty cool. And so it did. We've had a really positive time here ever since April. It's still bullish right now. So what does it have to do here? It has to get above this price resistance. We had some price resistance here at about 595. Price resistance can also be tough to get over. Because why is that? It's because a lot of traders or investors who bought up here, they didn't know they bought up here, and then all of a sudden the SPY or whatever they were in, and most everything followed about this pattern, fell down really hard all the way down. They're like, oh no, oh no, oh no. Price did manage to come back, but when price, and a lot of people say, if it ever gets back to where I bought it, I'm going to get out even. Well, that's called price resistance. I'm going to sell it and get out even. And so that's why we see when we come upon areas of consolidation like this, especially at highs, we can encounter resistance there, which means selling. That's sellers. We can encounter resistance there, even though it was from a few months before. So that's why we say we do have potential resistance here up at 612, 613. We do have potential support here at this 20-day moving average, again coming in at about 588, 589. The 50-day, the 200-day moving average coming in at 578, potential support as well. And then the 50-day down here on down to 561. So this recent pivot high came in here at 550. Just below the 50-day moving average now, and down, and this kind of lined up with this here, so even more. And then down to our low here at our pivot low at 508, and of course down to 481, 482 here at the lows. So these are all areas with potential price support, and whatever is below here. Below where price is now. So we will see, but I'm going to keep an eye myself. We're going to see if can the SPY run back up to these all-time highs, back up here at 613 or so. Can it do that? Or whether it gets a little sleepy here. And I wouldn't be surprised just because of the price pattern. We've had a heck of a run up. We've had a dramatic fall, a heck of a run up. And talked about price resistance here. So this pattern many times gets a little sleepy, but we'll see. Maybe not. Depends on what happens. But I'm definitely keeping an eye on the 200-day moving average at 578 and the 50-day moving average at 561. That's where they are now. I'm watching those because price needs to really stay above those two to remain that bullish. So. And of course, I'm keeping an eye on all of my protective stops. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that closely follows the Nasdaq 100 index, which is the top 100 non-financial stocks in the Nasdaq stock market. That includes the Magnificent Seven. So we have all the big key momentum stocks in this particular index or ETF. Now, today when I captured this chart, the QQQ was trading at $530.56, just about 2%, just below the all-time closing high, this little tiny green candle here on February 19th at $539.52. So looking back over here to where we are now, you can see that the 20-day, the red line moving average is coming in at $518. The 200-day is coming in at $497, and the 50-day moving average is coming in here at $484 and change. Now, when this uptrend is in place long enough, and price stays above these moving averages, the green line, the 50-day moving average, will gradually move up above the 200-day moving average and then be between these two lines. That's in an uptrend. That's the normal thing. But this move down was so fast that the lines got inverted as to their value, which is okay. It's fine. But they gradually should come back into being in the order we're used to seeing them in an uptrend. So, and if that's all confusing, just don't worry about it. Since the Qs dove to the down here to the April low at 402, up to where we are now has been again a 24% run up. That's a fantastic move. Since the Qs made this all-time closing high back here in February, excuse me, at $539.52. We know that the Qs rolled over here, went through the 20-day, the 50-day, and on down to the 200-day, fell below that, and dropped to the March 13th low down here at 466, then rallied up to the 200-day moving average. See right there, couldn't get over it, just hit its head on that 200-day moving average at 494. Then did a dumpster dive down here, back below its 20-day, all the way down to this April 7th low to $402.39. Then rallied on April 9th, and look how it came up here, smacked its head on the 20-day moving average. It's amazing how sometimes, not always, sometimes how accurate, or how strong, I should say, especially a falling moving average like that, how strong it can be when it comes into acting as a ceiling. Not always, but many times. You can see it did it here too, and here if you want to count. Okay, so it hit its head on the 20-day, pulled back to 428 down here, pivoted at 428, then climbed back up to the May 19th highs at 522, dropped down to 505, and then walked back up, climbed back up to where we are now, again at $530 and change. We have, of course, potential resistance up here, up to the highs, up to 539, 540. Not a very straight line, is it? But you know what I mean. We have potential support, of course, coming in here now at the 20-day moving average at 518, down here at this little pivot at 505, 506, down here to the 200-day moving average. But you can see back here how that resistance here, it can actually act as support now, this price where it came up and hit its head on the 200-day resistance, that this 200-day line, and that price also can act as support at about 497, 498 right here. That can act as potential support, is what I mean to say. And then we've got the 50-day down here at 484. We've got this pivot down here, down at 466. So all the way down here, we've got plenty of, the Qs have plenty of potential support at just about every level here, if it decides it has to slow down in any way. Now, if we look down here at the 14-day RSI, which is down here, we've talked about this the last few weeks. It's been riding actually almost 2 months, or 6 weeks or so. It's been riding in this overbought zone at 70, off and on, but pretty much on since the middle of May. So it's not, certainly it doesn't just get overbought and that's that, but it certainly is still, that indicator is still indicating that the market is overbought in the short term. It doesn't mean it's something to worry about, but over time it'll wear it down. So the Qs anyway may have to slow down and take a breath. They had a pretty strong move up here, a very steep angle. So they may have to slow down and take a breath and hopefully just move sideways here. And unless they can move up in the coming weeks and break higher, and who knows, that could happen too. As always, just please keep an eye on your protective stops. Okay, today we're going to look for our third chart, a daily chart of Global X Blockchain ETF. I wanted to visit this again when I saw the chart. I know we've looked at it before and traded it before. I like this pattern here. The Global X Blockchain ETF, symbol BKCH, has 24 holdings. Top holdings include Coinbase, Riot Platforms, Mara Holdings, CleanSpark, and Applied Digital. And I've gone through these top five stocks. I've gone through these top five holdings on individual basis, and most of the five, or a great, most of them have pretty good patterns themselves right now. So when I saw this chart, I was curious, and I kind of like what it's doing here. Now, when I captured this chart today, I'm going to call it the blockchain. The blockchain was trading at $49.30. It's trying to poke its way through. See, the 200-day moving average here is coming in at $49.03. It's trying to poke its way through that. And so if the red line, the 20-day, is coming in here at $44.56, potential support. The green line, the 50-day, is coming in here at $38.83. So I looked at a long-term chart, a monthly chart of the blockchain. You are not going to be able to see it here, but I'll just tell you this. It is a relatively new fund. It was opened in July 2021 at about $97. And at that time, it ran up to an all-time high in November of 2021. It ran up to $165. Then it reverted and gradually fell to a low of about 12, if you can imagine, in January of 2023. Of course, that all included COVID and everything. Then the blockchain climbed to a December 2024 high, and you can see that on your chart right here. It climbed to a December 2024 high on the chart, up here at $77. So then from there, then it started falling, and it fell down in a pretty dramatic downtrend here. Finally landed on the 200-day stop, tried to rally back up, landed on it again, retested, couldn't keep going, rallied up to the 50-day moving average, and then said, I give up, fell back down through the 20-day, and fell all the way down to the April lows here, down to $28.22 at the April lows. April 7th, like everybody else, but it wasn't as dramatic as everybody else in coming down or rallying. It came up off of these lows in April, and just gently, and what I like about it is pretty darned orderly, came up to back up above the 20-day moving average, finally back up above the 50-day moving average, up to the 200-day. Couldn't get above it in May, came back down to about 41 or 2 here, and then rallied up to where it is now, again at $49.30, just barely above the 200-day moving average. And again, and I'm not going to say I like bottoming patterns, but this is a pretty decent, potentially bottom reversal pattern here. It's orderly, and again, I checked out the top 5 charts individually, top 5 stocks individually. I like what they're doing right now, and that's as good as it ever gets anyway. So we only know right now. We don't know tomorrow, the next day. So anyway, in the coming week, if the blockchain can continue to climb above the 200-day moving average, so again, that 200 days coming in at $49. So if it can continue above it and stay above it for 3 days, I want it to stay above it for 3 days, and if the market is behaving reasonably well, reasonably positive, I will buy a small position in my trading portfolio with a stop, and I'm going to put a stop down here at $44.25. And I realize that that's a little ways away, certainly not visibly, but if you do the numbers from 49, 44, I know that's like a little more than 10%, but I will move my stop up pretty quickly if it remains above this 200-day line and continues to look positive. So I'm going to start out again, small position, stop at 44.25, and if it comes up, see this prior consolidation up here, then if the blockchain can move above 58, which is actually the top of this consolidation here, I will add to my position, and of course by then my stop will definitely be a trailing stop. It'll probably be that earlier though. So at any rate, you may want to keep an eye on the blockchain ETF in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Now, in my training program, Trade the Trend to Profits, definitely one of my favorites, you'll learn when to buy, how to easily manage your trades, and then learn exactly when to take profits. And you're going to make bigger profits while spending less time researching and monitoring your trades, and I like that. Our new low price for this program is only $127. You should be able to make that back pretty easily with the knowledge. By the way, some of my trainings listed here are only $59. So, and remember, when you order, you're going to receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever popular 7 steps to successful trading to how to swing trades successfully, an all-time favorite. Again, Trade the Trend to Profits, how to read charts, great for novices and those who want to brush up. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen right here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.